So here's the reason why you work hard is when you get these awards, you use it on your social media. Because remember, people want to follow doers. They don't want to follow somebody that's just like farting around, right? So when they do local recognition, they've been combining categories. So training associate, and senior associate MDs. That's how they do it. And then of course all the SMDs, they have their own categories.
We added a new one.
Oh, okay.
I'm not going to tell you. But
Yeah, I know. Of course you're not going to tell us. Of course you're going to tell us. But here's the thing, it's, okay, just so you guys a preview of why, you work hard. Like, I told my wife to even walk across stage with me. She didn't want to. She said, no, it's you. I was like, no, I work my ass off to be walking across stage. So imagine, so some of the awards I got that are in my office. So out of all the MDs, senior associates, number 8 in the entire hierarchy. Right, and there's probably about 150 to 200, maybe about 150 senior associate MDs, and I didn't expect the bigger canvas. Number 5, cash flow non-SMD in the entire hierarchy.
yeah, they do non-SMD, by the way, categories. So
Yeah, and also too, those are those plus I walked across the stage for my watch last year. So something I want to ask you guys, what's your next big major goal that you want to accomplish? It could be, before Walpole. Is it becoming a senior associate? Is it becoming a marketing director? Is it getting your watch? Is it getting your ring? What is it? Right? Because you have to have, something that Jim Rohn talks about is the reason why people never really do anything in their life is because they don't set any goals. They don't know what the fuck they want. They do not know what they want out of their life. And you guys being in WFG, that's all we talk about, is goal setting, right? So I told Nick one of my major goals before Walpole's earn my ring in the big shop, right? I'll tell you guys my numbers. I need to make $21,000 this month, next month, and in October I would have my ring. So you throw in a few annuities. I already know how much I have to write in premium, 40% advance. Like how well do you understand the comp that okay, I need to write X amount to earn this much, right? I've had that conversation with my team and a few other people in this room. It's okay, how much money do you need to make every single month to quit your job? Do you even know? Okay, if you know, now reverse engineer how many clients you have to talk to, how many clients you have to sit in front of, how much target premium you need to write, right? So if you want to make, say, $2,000 a month, if that's what you're making at your job, and you're, say, an associate, I will tell you right now, a 40% advance, you'll need to write 12,000 points a month. That's 4,000 points a week. That's like 1, maybe 2 families a week, every week. And by the way, that money you're earning through WFG, you should be saving. Because your bill's already paid with your day job, correct? So everything you make in WFG, you should be saving. I remember when I came full-time, I had 20 grand saved. That's more than what I made an entire year at Costco wholesale. Right? I just saved and saved and saved. The only reason why I spend more money now is because when we go out, like meeting after the meeting, right? Plus I still practice the exchange principle, the meal exchange, right? Like this past week on Tuesday, Nick didn't realize I paid for his beer until after I told him. I was like, I got your beer, right? And you should be doing that, especially if you're doing well in the business. Your upline should not be paying for their dinner at all, right? Now, of course, Nick takes care of his mom because that's his upline in life, right? But here's the thing: is what's your big major goal from now until Walpole? And really just focus on it, right? And I know for myself personally, I know I have to do at least 12 directs between now and then, and I have a really, really, really good shot at getting my ring by Walpole. If not, I'll still have it by the end of the year. That is still the major goal. But I would love to get recognized for it at Walpole, right? Imagine getting recognized in front of 1,500 of your peers at Walpole walking across stage. Right?
How about SMD, Matt? How about SMD promotion, Matt?
End of the year. December 31st.
You know, you get carried up on stage, you get to make a video of your
Yeah,
life.
I have my song already picked out. I got pictures already ready to go. Like, it's already ready to go. But the main focus is, I don't want to be, I've seen a lot of SMDs just get promoted to SMD and not have a base shop right after. I don't want to go out that way. I've told Nick, I'm an MD, I already have my watch, I'm going to promote 2 MDs before I even think about it. Right? Like, honestly, I feel uncomfortable that this isn't my team right here. Right? But the only way that's going to happen is that, just like what we're talking about in pregame, is back to basics. Prospecting, doing phone calls, one-on-ones out in the field. That's it. That's as simple as the business is. Right? So today, my topic with you guys, though, is what I've been doing out in the field to help clients, right? And we're going to talk about the whole full care package. You guys have heard this come from One Jaime before, if you've been in elite academies and stuff like that. So when we talk about a few of the things, just think about what WFG does in total, first of all. Okay, this is a product matrix if you have a life only or life and health license. This is everything you can do. Okay, you can do IUL term with living benefits, IUL with LTC or living benefits, 3 different types of annuities, and final expense. Okay? So Primerica can't do this. They only sell term, which by the way is the most expensive term on the market. We've had numerous conversations about this, right? There are other companies like Premier Financial Alliance, Freedom Equity Group, and PHP, People Helping People. They ain't got nothing on us. They think they do. I had a conversation with somebody from PHP. They're like, "Oh, I'm a part owner in the company. You know, when the company goes public, I'm gonna get, I'm gonna make all this money." And I'm like, "Really? So, how many shares do you own of the company?" Because obviously he doesn't understand how companies work. And he's like, "None. So, how are you gonna get rich from the company going public if you don't own any shares of the company except Patrick Bet-David?" Right?
Yep.
Yeah.
And also too, if you own your own corporation like I do, I own all 100 shares of my own corporation. But the beautiful thing about being in WFG with proper estate planning, which you'll learn with time, is I'm able to pass on my shares of my company to my family, and as I'm earning passive income from WFG through overrides, my family will always have it. That's why you build a business. But also, too, that's why you build a big book of business through WFG, is because you get all that renewable income from all your clientele, right? So this is just a small piece of what we do, but we're actually going to apply it. But remember what you do.
Did you take those pictures?
Yes, these are pictures taken from my iPhone. By the way, I have like 3 other pictures. Okay. You have to remember what you do for the client. This is what you prevent. This is what you prevent out there talking to people about owning life insurance. And yes, people will say, I don't want to talk about it, I don't like planning for my funeral, all this other stuff. It's like, okay, so when is it ever going to get taken care of? Because if not now, when? Because by the way, the government is going to take care of your family if something happens. Let's set that straight. Okay? By the way, you can have these conversations across the kitchen table with people. You can be very straightforward. They will thank you for it later. Trust me. I've had people thank me for saying, you know what, I'm glad you're very straightforward with me. I'm glad you were very stern with me, because I don't think anybody ever has. But because of you, my family's taken care of. Like, they know that they need to do it. They just need that little extra nudge, right? But this is what we prevent, right? Even if it's just a final expense policy, which I'm going to talk about today too. You get a $10,000 final expense policy that helps prevent a lot of this stuff. They can plan at least for the funeral. You guys realize, and I can pull Price Finder even here, an average funeral here in this area within about 10 miles is about $8,500 to $11,000 average. And most people, they don't have that much saved, like straight cash, paper, stuff like that. I was having this discussion with some of my teammates the other day. that, well, what if I outlive, or what if I put in more money into the policy than what I'm covered for? It's fine, you're still leveraging the insurance company, because you're still gonna get your money back plus a little bit of interest, plus you still have all the services that come along with it. They're like, okay, that makes sense. Because, somebody like me, I'm in my 30s, yeah, I'm gonna put in a lot more money than what I'm covered for, right? Which is gonna happen. But I'm fine with that because of all the services I'm gonna get that comes along with it.
Absolutely.
Right? So now, when we talk about a full care package, what are we talking about? So it consists of 3 parts. The first part, properly designed IUL or Index Universal Life Insurance Policy. Okay. Now you guys hear it in our KTP all the time when we're talking about, what's the article? A low no tax code that helps save you money.
Mm-hmm.
Right? Most individuals are unaware of a low no tax code that's available to all investors regardless of their income or net worth. Right? The tax code for this is IRC 7702, which states that money that comes out of a life insurance policy, as long as it's properly designed, family will never have to pay taxes on it. Right? Now, what we mean by properly designed is designing an IUL where it's big enough that you can overfund the crap out of it, right? Because that's the whole idea.
Yeah.
Because if you do too big of a life insurance policy, what does that do to the cost of insurance? It's a lot higher. So that means more of your cost of insurance is eating away from the cash value. Okay, so the idea is to build a policy big enough that you can stuff in as much money as you can without it overflowing and becoming a modified endowment contract or a MEP, right? So one of the things I like to say out in the field, explaining to a client is, who drinks Starbucks in here? Be honest. Everybody does. Okay.
No.
Okay, so at Starbucks, right, there's a tall, grande, venti, and trenta, correct? Yeah,
Yes.
it's big.
Yes, it
It's
is.
huge,
So
huge,
good.
right? So you look at it this way, there's only so much coffee that can go into, say, a grande before it overflows,
Right.
correct? Same thing, the same principle applies in life insurance, where if you put too much money in, anything that overflows becomes a modified endowment contract, which becomes taxable. That's why, that's why they put a lid, and I do that with my hands, a lid on how much money goes in. So essentially, if you know you're gonna wanna save more money over time, we wanna look at a bigger life insurance policy or a bigger cup of coffee. Does that make sense? Right? So how you look at it. Because remember, at the end of the day, it's about making sure that they are properly covered, which I'm gonna go over next.
Ooh, $10.
$10. Right? The whole idea is to make sure they have proper coverage, but you design the plan where they can save a lot of money over time, right? Because that's what we're all about. We're about proper protection and accumulating wealth, right? So next part, term life insurance policy, preferably one with living benefits. Now, here's how I like to do things, just so you guys understand what I'm doing out in the field. I will tell you the biggest IUL I've ever written is roughly about 750 grand, face amount. Okay. Now, does it warrant for some of my clients to probably have $1 million? Yes, but they don't need a full $1 million their entire life, right? Because as we get older, right, there's what they call the law of diminishing liabilities. So you shouldn't need as much coverage as you get older, correct? So the idea is, let's just say if I'm sitting down with Jenny's say making, say, 60 grand a year, she should be covered for at least 600 grand, correct? Now, do I do all 600 grand in an IUL? No. I probably do maybe 250, maybe 300, just so it's big enough that she can save a lot more money into it. And then all her other liabilities, like her house, her cars, her girls, preparing for college, all that other stuff, that's probably about another 300-400 grand in a term. Okay. Now, should have living benefits, right? If it makes sense. For most people, it does. So as long as they qualify for the life insurance, they get all the living benefits too at the same time, right? So that takes care of her insurable need, where she's accumulating money for the future and she's properly covered, right? Depending on how much money she can save. And then the last part's an Everest plan. So how I like to explain it, which you guys have heard me say before, it's having an Everest with the concierge service, the price finder, the Tenzing, the pre-planning service, everything that's, that comes along with it, including the quick payout of 48 hours or less. I mean, you should be selling that as a benefit for an extra 20, 30 bucks a month. And it's all rolled into a life insurance policy included, right? And how I like to explain it, it's the bridge money, right? It fills the immediate need right now to pay for the funeral home and all the expenses, while you wait the other 2-3 weeks for the rest of the life insurance investments to come in. Does that make sense? And that's how you want to, that's what they call full care package. So rule of thumb, client should ideally be covered for 10 times their annual income, but it's dependent on how much a client can save in the insurable need. Now, will every single situation end in this way where you're doing all three? No. Because sometimes there is a, income constraint based on how much money they can save. So I will tell you guys how, I want you guys to start thinking about how you do these. It's, okay, if they can't afford an IUL, do a term and an Everest. Right? If they have maybe some insurance through their company already, or maybe they have a separate policy that's already been enforced for many years, and it doesn't make sense to replace, say, if they did have a term, then it should be IUL and an Everest.
You're saying if they have like an insurance?
Yeah, maybe if they have insurance through work, because it might be, it just might be a money constraint. In an ideal situation, this would be it. This would be the situation. Doing all three, right? This would be ideal. Now, will this happen every single time? No. But I will tell you, the people that you sit down with that are in the right markets, that can save a lot of money, this will happen every single time. By the way, something I want you guys to write down. If you sell them one product, you're a salesman. If they own multiple policies with you, you're their advisor. That's why you never want to sell just one product. Why do you think the turnaround rate on term life insurance policies is so high? It's because somebody says, well, I can get a cheaper rate somewhere else. And then somebody like us can come in and replace like a POS Primerica policy or any of these other types of term policies with our term policy, which is cheaper with living benefits, right? And then say, okay, well, where else are you saving your money? You say, well, 401k, IRA, Roth IRA, whatever they say. It's like, let me show you a different avenue. Let me introduce a different solution for planning for retirement versus just what you've been taught your entire life, right? Because people think, well, I go through the bank for everything. Okay, that's great, but have you ever thought where the bank puts their money? They're like, no. And then I tell them, you guys have heard the FDIC, right? Federal Depository Insurance Company. Guess where they get their money from? Insurance companies, yeah. So why not bypass the bank and put your money where the bank puts their money, which is inside of an insurance company, right? So we can go about, let's see, we get time. Okay, let's go about this a couple different ways. I'm going to ask maybe one or two of you guys to come up.
Oh,
He's like that? My wife and I's engagement photos. Okay. So what I want to do is, let's run a couple different scenarios. Okay, I'm going to ask you guys a question. You tell me how you'd want to design the plan, or how do you come up here and do it. Actually, you know what? Let me flip it around. I'm going to give you the scenario. I'm going to have one of you guys come up and actually build the illustration.
What sensation feels to?
Yeah, somebody new.
Volunteer.
Jay.
I'll do it.
That sounds like volunteer.
Yeah, no, I'll actually have Jenny come up because she's been playing with the software. All right. So I'm gonna give you the scenario, Jenny. Maybe it's that way. I'll talk about this later. All right. So here's the scenario. 30-year-old male. Okay. You can just put in value climber. Just leave it the way it is.
okay.
Okay. 30-year-old male. Okay. Can save $200 a month and makes 40 grand a year. So 30-year-old male can save $200 a month, makes about 40 grand a year. How would you design the plan?
So what I would do is I would look into coverage, because I'm not familiar yet with like how much the coverage costs, like how much
Okay,
200.
I'm gonna stop you. Okay.
Okay.
You should be asking yourself, or asking me, okay, what other information do I need?
Oh, yes.
Do I smoke? Am I married? Do I have kids? Do I own a home?
Okay.
Okay. You guys have to remember, when you're out in the field, you are a field underwriter. You are the first line defense, not only for your client, but also for the insurance company. And you have to do both.
Okay.
Okay, but let's say single rents, okay, rents an apartment, doesn't have any real financial responsibilities, but can save $200 a month.
You smoke?
Nope,
No.
clean.
So now, will you put him in an IUL where it's,
How would you do it?
what do you mean, on
Don't-
here?
Yeah, don't ask me. Here's the thing, guys, if I'm bringing you up here, you're gonna physically you're physically gonna build the illustration. This is the only way you're gonna get better at it. Because part of the problem most people have is they're not confident enough to go out and build an illustration. Right? When I was growing up in the base shop, I was playing with the software constantly. Like, if you give me a particular scenario, I can already tell you how I would set the foundation and then go from there. Right? Change the age just change it to 30. It's fine. This is just for training purposes. But keep in mind, guys, when you're out in the field, what do you want to do? You want to put in the exact date of birth.
Yeah.
Okay? Male preferred, should be always preferred. Okay, scroll down.
Can you explain preferred
Two fingers.
to those that?
Yeah, okay, hold on, stop. Click on the risk class. Okay, you guys notice there's 6 different ratings, correct? So, based on what you know about the client, there's a risk assessment. Okay, rule of thumb, always do preferred. Never do preferred plus or preferred elite. You let the lab work do that. Okay, I'll get to you in 1 second, Ethan. I'll get to you in 1 second, okay? These risk classes just basically tell you how very healthy a person is, but you always let the lab work do that. Because obviously, if a person has preferred plus or preferred elite, what does that do to their cost of insurance? Right. Now, in turn, what also happens?
More cash value.
Right, exactly. But now here's the thing is, you always do preferred, right? You undersell, you over-deliver. Always. You know, just because a guy looks like Swanson, I'm not gonna give him preferred elite. Right? I've seen people do that, and guess what? They come back as a smoker. Because they didn't disclose that. See? Exactly.
That's because my height to weight ratio is.
It's also off,
Yeah.
your build.
He came back as non-tobacco.
Yeah, just build. Right?
Yeah.
Because things like that do happen.
Because you don't want to go to the client, and you told the client it was going to be $100 a month, and then you have to go back and go, well, you know what, because I put you as a.
Right,
preferred
and see,
elite, now you're
and
paying
now, and
125.
this is the reason why, because of that, that's the reason why you overfund a policy. How I like to do my policies, I have them overfund by 20, 30% minimum. So let's just say, they say they can save $400 a month, I'd probably make their target premium, probably about $275, maybe $300. Gives you that cushion,
Yeah.
just in case they get a rating or something like that. Also too, keep going, Jenny. So now also too, if somebody says, you know, they might be, maybe say a little overweight and they might be taking some medication, I probably do non-tobacco, right? And if it's questionable or you're not sure, gather the information, tell the client, look, I'm gonna call the insurance company, I need to speak to an underwriter because, you know, there is a risk assessment I need to take into account at the same time. Call an underwriter, get them every single little detail. Like if you run into somebody that says like, Jenny and I, we have a follow-up on Sunday with one of her cousins. One of her cousins is a type 2 diabetic. And I asked, and what some of the questions I asked her, what's your A1C? What's your sugar level? What other medications are you taking? So I called, they said, okay, right now it would probably be non-tobacco table D. I was like, okay, what I'm gonna do, I'm gonna submit that as a trial app.
Yep.
right? Dry, no premium, because I don't want to risk getting a chargeback, because I want to keep my persistency high, right? I'm trying to help lift the team up, right? And make sure that once that policy gets approved, they say, okay, it'll be this. He might just get a standard non-tobacco rating, no table rating. I don't know that until the lab work and everything's done, right? So that's why they have different risk classes, so you can tell them, okay, this is what it looks like. Does that make sense?
Question,
Okay.
when, at what age, like, is there a certain start or cutoff age where you would recommend the long-term care for them?
Probably around 40.
So 40 and past that, you would do long-term care?
Okay.
Okay,
$250,000 policy. Okay, 1723 target premium. Okay, now build it. So scroll down. Yep, keep going. Okay, stop. You see where it says, yeah, change that to specify all. So you know it's roughly about $150 a month for somebody 30 years old for $250,000 of coverage, right?
Mhm.
So if I told you I can save $200 a month, good.
And then I would
Increase it by-
recommend like $50?
No, do 100. Always 100. Here's the thing, guys. It's when you're building these illustrations, you want to sell it as big as you can, right? Because the bigger the number, and then you show them like, I don't know if I can save, you know, $300, $400, $500 in the future, and then you show them, okay, let's just show you $200 flat. They're like, it doesn't look sexy. All right? Your job being out in the field is to make an IUL look so damn sexy that they just like pick it up and run off with it. That's the whole idea, right?
Question.
You can do
now-
age 64, A64. 64, okay? And then go and hit reports and summary.
Are you doing level or increasing?
Yeah, should be
Yeah, change
increasing.
it, should be increasing. Okay, I'm going to hit reports, summary.
And then can you explain the difference to some of the,
Mhm. All right, so before you scroll, Jenny, okay, so here are the numbers. So specified amount that she gave the client is $250,000 in coverage. So God forbid, knock on wood, right? The client's families would inherit $250,000. Okay? Showing 7.75%, $200 a month going in. The target premium, this is what you actually get paid on, not the entire amount. Remember, it's only target premium. Okay? 7 pay means this is roughly a little under $7,000. That's the most amount of money that can go in per year for the first 4.5 years. I know it says 7, but
Why
it's
does it
just a
say
tax law.
7? Why does it say 7?
Tax law.
Say that again, Matt? The
7
7
pay?
premium?
That's the most a person can put in per year. 4.5 years. Because if you take 4.5, you multiply it by that number, it gives you this number, the guideline single premium.
And that's to buy that policy.
That's pretty much to buy out the policy, right? But now here's also the thing, is if they do this within the first 10 years or that 7 years, the most money they can put in per year is this number right here. The guideline annual premium, which is roughly about $500 a month. So you'll probably see in the illustration, she's probably hit the cap on how much money can go in, so you'll actually see it drop down to this number. Okay, go ahead and scroll down. Oh, she only got to 400, okay. So scroll down all the way till 65. Stop. So, just a straight IUL, the clients put in 159 grand, there's 510. Not bad, right? Now, also too, you gotta remember, what does the insurance company do first when you start taking loans against the policy?
Pays out their...
Their premiums first,
First.
before they actually touch the cash value. Okay, so in all reality, if you really want to think of it, that's what, 670, 680 back to the client?
Question. So the cash surrender, that's just the cash value in
That
there?
which you have
That's
access
not
to.
the premiums that they've been putting in, the ones they've been...
Nope,
So it's,
outside of that,
wow, okay.
okay? And also, you guys gotta remember, when you explain this to a client, it's like, look, if something happens to them, right? The client's family inherits the 250 they're covered for, plus the other 510, or a total of $760. Does that make sense? Okay. Now, something I would do is instead of putting the full 200, I'd probably look at maybe like a $5,000 or $10,000 Everest,
Okay.
right? Like what we talked about, immediate need. Because this is probably a client that maybe might not have 10, 15, 20 grand already saved. And you don't want to run that risk, right? Because people are like, I don't want my family to wait 2-3 weeks to get a death claim, right? So if you look at it, thank you, Jenny. Give Jenny a round of applause.
All right, Jenny.
Right, so now, oops. Now let's just say if we look at, say, just a basic Everest for a 30-year-old male, right, we're looking to say at 10 grand, 2330. Literally like, what is that, $5 a week?
And
Yes.
when you determine it's a 40-year-old, and you decided that only 10,000, what is that?
I usually like to use 10,000 as a nice round number. Some people, if they already have a lot in life insurance, they can get away with like 5, which is perfectly fine. Because that person probably has a lot of life insurance, they probably got cash in the bank.
Okay.
Like if you look at people's habits, if they've been saving money, they got a lot of life insurance, they probably got cash in the bank. You know what I mean? But also too, I mean, these are questions you ask in a KTP, like how I do my KTP. It's still pretty much on board 100% with Nick. I just asked a few extra questions, right? Where are you saving your money and how much you got? Because remember, you're there to serve them. I was telling this to Anthony the other day because he's like, dude, I don't know what, I was struggling with this one thing. I was like, dude, remember, you're out to serve people. It's not about you. It's about them.
Would you say for the most part that the 10,000 is a magic number?
I'd say 10,000 is a nice, good round number, because most people know if they've ever had to plan a funeral or know somebody that has planned a funeral, it's about 10 to 15 grand, right? So that's how you look at something like this. Now, what if in a different scenario? I'll give a different scenario. Let's do home. All right, who wants to volunteer? CJ, all right, come on up.
All right, CJ.
All right.
Okay, you ready, CJ? All right. 40-year-old, single mom, 2 kids, can save $500 a month. Owns a home. Okay, home's worth, say, $250. I'll leave it at that. Perfectly healthy, non-smoker, owns a home, single mom, 40 years old, can save $500 a month.
Where'd she get this house for
Like
200?
annually.
She bought it years
10 years ago.
Actually, my house was $239 when I bought it.
You never know. Beaumont, Moreno Valley.
She bought it back in 2010 when the market was decent.
Okay, and one other piece, she makes 85 grand a year. Drill, practice, rehearse. Drill, practice, rehearse.
Question.
Yes.
So for the homeowner part, would you, so when you say she purchased the house for $250, you kind of base it on what they owe on the house, or what's the value, what they owe on the
What they
house?
owe.
Because that's what'll get paid
Yeah,
off.
the value is different,
Okay,
because she could turn around and sell it for more if she wanted to.
got it, okay. Man, I'm worth more dead than alive to my kids right now.
Yes.
We all know.
Yes, we all.
We all are.
Careful, you don't tell
Supposed
them
to
that.
be.
No, see the difference is my wife knows, so, and she's the cook, so she could be slowly poisoning me right now. I wouldn't even know.
Don't say that now.
It's a MacBook. You have to use 2 fingers to scroll. Okay. Okay. And see, when you guys come up, this is how I can tell you're not playing with illustration not enough. Right? Like, you guys gotta remember, when you're not at your job and you're not doing family things, which I get most of us do have families, what do you do with your other spare time?
Learn.
You should be mastering your craft. Right? Other things that you should be doing, like I'm reading 2 books at once right now. I just got the Ed Milet Max Out book.
You started?
I already started it. Like some of you guys said, a lot of you guys follow me on social media. I got done with my appointments in Huntington Beach. I was sitting on the beach reading my books. I'm like, I got done at 5:30. What's the point of me trying to fight 2 hours of traffic just to get home? I had pre-planned my day. I was telling that to Jessica and Henry in the Mozone. I pre-planned my day the night before. So if I know I'm gonna be in Huntington Beach, right, my last appointment's at 5, I'll probably be done by like 5:30, 5:45. Traffic's probably gonna take me 2 hours to get home. I brought my backpack, my change of clothes, and a couple books in my notebook with me, just so I can take notes and write other stuff. But also too, it's a good opportunity for myself just to sit down and really just, there's nothing around me except the ocean and the other people there, right? But just to sit and just really think about, okay, what's my next big step? What do I want? What am I willing to give up to get what I want? Right, there was something I read in the John Maxwell book I'm reading right now. There's a quote by one of our U.S. senators, Sam Nunn. It says, you have to pay the price. You will find that everything in life exacts a price, and you will have to decide whether that the price is worth the prize. So you really think about, okay, something I wrote down in my notes was, okay, what kind of life do I want to live in the next 5 to 10 years? And even in the next year, what does life look like? Right? Okay, this is what I want my life to look like. Now, what am I willing to give up? What are you doing, bro? Save it as a different case.
Huh?
You'd have to save it as a different case. So save that one. Right here. Case. Save as. Okay, CG will be the last one. Just name it client space CJ. Right? So while I'm doing that, it's really thinking about, okay, now what am I willing to give up to have that life? Like right now, you guys are sacrificing time away from your family to be here today, right? And something has to be in your forethought, but it's like, okay, why don't we have more guests here?
I have a question. So regarding this case you just gave CJ, so if she has $500 and, you know, she's a single mom, she owns a home, all that good stuff, would it be better to plan it backwards? So she tells me I have $500, first do like an Everest, and then, right, because that's something that would be good for her. So minus that from the $500 that she has, and then kind of play it backwards that way, then do her IUL, see what she qualifies for, you know.
You always do the IUL first.
Always IUL first, okay.
Remember, you want the big permanent coverage first.
Mhm.
Because what good is if she owns a $250,000 home and she only has a $10,000 policy,
Right, diverse.
right? So you always have to think ahead of time. But like I was saying, while he's still finishing this, it's, okay, now what am I willing to give up to give the life I want for my family? I already told my wife I'm going back to doing appointments on Sundays. Okay, that's what I was doing when I was single. Doing an appointment 7 days. Missy and Nick know I was on appointment 7 days a week when I was single. Like, I was single, not married, didn't own a home, didn't have any kids, no nothing. And I'm out in the field every single day. Even my parents question it. They're like, why are you leaving on a Sunday? Because I can go help a family. I can go help a family make money. I mean, shoot, and I'll talk about the comp here in a couple minutes whenever CJ finishes. Right?
Just trying to figure out what to do wrong.
But you got to be constantly working every single day. Like even tomorrow, I have a follow-up with Jenny tomorrow, right, on a Sunday, and it's in Marietta.
Now we're gonna recruit her.
Yeah, and the goal is to recruit her cousin.
And get them in Everest.
See, now look at this. Go recruit her. So we go write policies on her cousin and her, her cousin and her husband, right? Recruit the cousin, get in her market. They're like, okay, well, the kids need policies. Top 25, go out and build her a team.
And all her kids, she has kids in high school, in middle school, and they're
Bro!
on the football team. And
What are you doing? It's taking you so long.
Should just
You-
refresh it.
No. Just start a whole new one, dude. Start a whole new one. Come on. Case, new. No. Forty-year-old female.
Homework assignments.
Okay. Should be preferred. Okay. Here's the thing, guys. Can you imagine if he was sitting in a KTP right now?
Would not close.
Yeah, you would not close at this point. You're taking way too long.
What's the living benefits?
You're doing it right. Why is it doing
No,
it?
that's
Did you hit a
well-
brand new
The-
policy?
Yes.
What's the benefit ages? Does that
Change this one to 60. That's probably it. I've never had that issue before.
Me either. That's why it's like kind of weird.
60. Okay, now hit summary.
There it is.
Okay. So, all right.
26, 23,
All right, so she probably need a 20-year term minimum. So that's 4085, okay. Did you build the IUL already?
Yep.
Okay, show me the IUL. So you guys remember 4085 for a $500,000 term. Okay. Close it. Type in client right here. Client. ENT. Enter. Okay, client CJ. Okay, now show me the illustration. Oh, you didn't fund it. I thought you said you built it. And
Oh,
all
no, I
that
didn't.
time? Come on, bro.
I need a mouse. I'm not used to trackpad.
Adapt.
Yeah.
Premium specifications. Solve. No, go up to solve, because you're gonna have to tell it to specify everything. Solve.
Oh, right. Yeah, I just wanted to get the amount initially.
Okay.
Okay, that's good.
Next
Now
one.
change
No.
them. Come on, CJ.
Can't get my fingers working.
It's because you're in front of a crowd, dude. If you were in front of me, I'd be drilling you. All right. So if you know the target premium, what was it? 26,
222.
220 a month, right? If you got 500 to play with, how much money would you put in the IUL?
Probably 450. The way you have some
I'm
left over
gonna
for.
tell you right now, one thing you haven't considered are the two kids.
Right.
You could have added them as
Right.
riders on
Riders,
the term,
yeah.
on the term,
Right.
not on the IUL.
Okay.
So
What would be the difference in?
pricing,
Okay.
cost of insurance will go up. You have to remember, when you add riders on an IUL, what does that do to the cash value, guys?
Goes down.
So where would it make more sense to add those riders?
On term.
So
Makes sense.
Okay. See, this is the stuff that you guys have to get good at, right? Because if you're out in the field and you're trying to close this app, I'd be looking at CJ and be like, okay, what's taking so long? Because remember, you really have a person's attention span for about 45 minutes. And if you can't build an illustration in less than 5, you got problems. You want to make sure that you can build an illustration in less than 5 minutes.
You always go 4D.
Yep.
But now question, Matt. So right here, he's doing the premium 450.
Mhm.
And so he had done like an Everest for her, right? And then the term IUL.
Yeah, if he doesn't, Everest is probably like $20.
$20.
So even if you went over just a little bit,
Yeah.
you can still do it. Did you hit save? Okay. Okay, scroll down to 65. Let's see how much. Okay, now let's stop. You guys notice this? Remember what I was talking about at the very beginning? That means the policy's not big enough. So that means you gotta go bigger on the IUL. So close. Okay, how much coverage did you do initially? That's the reason why. Probably like 350. Okay, now rerun the illustration. Okie dokie, it should work. Okay, 60, well, he would one extra year, so stop at 64. But if he did stop at 64, 437. That's 450, 550, 650, 750, correct? And some people say, well, I don't know if I can save that amount of money, like $750 a month, whatever the case may be. Okay, do you want to live on less? Jenny's like, I knew it was coming. She's like, I knew it was coming. It's either you can reduce your goals and live on less money, or you can save more money, or you need to earn more money so you can save more money.
You literally asked that?
Yes.
Yes, he does.
Okay, but look, Anthony's been out in the field with me, Rube's been out in the field with me, Jenny's been out in the field with me, Janice Byron been out in the field with me. Have I ever had a very straightforward conversation with people? Okay, I'm not scared to tell them straight up. You have a problem with some people or a lot of people? They're freaking chickens.
Yeah. Yeah.
Because guess what? If you don't tell them what to do, they're going to hate themselves down the road, or they're going to blame you for not teaching them the right way to save money. Remember, our job is to teach people the right way to save money and have a very straightforward conversation. There is no sugarcoating saving money or having life insurance. There is none. Okay? Be very straightforward. It's okay. By the way, I've never been kicked out of a house for being straightforward. As much as somebody might not like me, at the end of the day, they're going to say thank you.
Right.
Because if not now, when? And if it's when, it's probably going to be too late. That's why it needs to get done now. And if somebody says, I don't know if I can afford it, okay, well, what can you afford comfortably? I'd rather make it very comfortable and they can afford it, they keep it long-term, that serves them more, than them saying, I can do it, and then they're gone in like 2-3 months, like I can't afford $500 a month, right? All right, so she would have almost $500,000, or actually she'd have more than $500,000 because you have the 217, and you did a term, so that's probably about, almost, with the riders, probably about $500. And then maybe add in, say, another $5 or 10 grand in an Everest, right? So that's how you look at it, right? And by the way, the more, if somebody can, if they value money and they've already been saving money, showing them an IUL is a cakewalk, right? And then you show the benefits of being properly covered with an Everest, and you explain all the benefits of an Everest policy, just like what David Yu was talking about on Tuesday. Game over. Game over, right? And as we wrap up, right? Thanks, CJ. Give CJ a round of applause. As we wrap up here.
You need a PC.
Huh? With all the viruses? No, thanks. I'll pass. Okay. Now let's talk about how much money you can earn. Okay, this is an example. This is somebody probably very similar to me. The only difference is I got a baby on the way. Right? So a 34-year-old male, preferred non-smoker, married, owns a home, no children, earns $75,000 annually, can save $400 a month. Okay? If you did a Transamerica FFIUO for $250,000 face amount, right? You guys understand the difference between face amount and how much you're putting in, right?
Yes.
Okay, just making sure. And let's just say that target is $2,030 or $169.17 a month. Okay? And let's say we contribute $300 to start, so how much am I really overfunding it by? Significant amount, right? Add in, say, a term LB, 500,000 face amount, right? So now how much is he covered for? 760 if you add in a $10,000 face Everest, right? So now if you look at comp, all right, who's a training associate in here? Raise your hand. Can you guys please do your 3 and 3? Please. Okay, so now let's look at it this way. If you guys did something very similar to this, one a week, this is, say, one family a week, you're making $865 a week or an extra $3,400 a month. You did that in a year, 41 grand. By the way, 1099, all the tax write-offs, and you probably could come full-time. Probably. How many associates? Raise your hand. Okay. If you're at a 45%, I'm not going to ride you guys. Oh. So at 45%, now look at this. $1,284 a week.
You should still hurry up and get out of that.
That's
$1,284, that's $5,100 a month, right? 61 grand a year. Senior associate, I think it's only Lupe, right? Yeah. It's just Lupe. $1,576 a week, $6,300 a month, or 75 grand a year. Your marketing director, right? $1,775, $7,100 a month, or $85,000 a year if you're an SME. $2,200, almost $2,300 a week, or 110 grand a year. By the way, guys, you guys want to know the numbers? If you only need to close one appointment a week, how many appointments do you think you need to have booked?
10.
10. Right? Because it might be a combination of things, correct? If you have 10 booked, 5 will probably cancel or reschedule. You're going to go on 5. If you're a decent closer, you'll probably do 4,000 points a week. Now, if you really look at it, guys, I mean, that's, what's that? No, that's actually 3,000 points a week. You know, if you did that every single week for an entire year, you'd be at 144,000 personal points. You'd probably be in the top 10, maybe top 25 in personal production in the hierarchy. Last year, I think I did like 165 in personal points last year. And it's really just, it's a simple focus like what you've heard Reggie talk about. One recruit and one family a week that you're helping. Now imagine if you're an SMD like Thomas or Ash and you got a base shop, right? What's your override difference between, say, you and a training associate?
50%.
So if you get 50%, you get $1,500. Come on now, come on, right?
You weren't even there.
And you weren't even there.
That's right.
I imagine, Thomas, what if you had 10 guys as an associate doing that? You're getting, say, 30% override.
It's coming. Yep.
Overrides, sweetest.
Just, it's, this is the reason why we're not prospecting enough, we're not making enough phone calls, and we don't have enough guests here. Like, I don't know how much simpler to make it beyond this.
Yep.
This is as simple as the business is. It's prospect, make calls, go on appointments, recruit a team, make them a client, take them out in the field, build them a team, and just duplicate over and over and over and over and over until you're done.
It's called there's 5 words. Build a big base shop.
Exactly.
Yep.
Right, when we were talking about that in the Mozo, like, like it's like, oh, it's my birthday today, I'm not gonna come. Really? Seriously? Like, every single year, I think most of my birthdays have either fallen on a Tuesday or Saturday that I've been in the business. I'm here.
Yeah. My 50th birthday.
Yeah, you were here.
Tuesday night, I was. Yep.
Didn't we go, where did we go?
No, that was.
Oh, that was
50,
before. Oh.
50, Matt, I'm 63.
Sorry.
Yeah.
Sorry.
I've
been in business that long.
Thank you. Thank you. Yeah.
Great, Melissa.
Right?
Oh, my
But it's like, all these people got so many freaking excuses. Oh, it's my birthday. Oh, this, oh, that. And when I say, to Mozone, and you're still freaking broke, working 3 jobs.
Sold out.
And yet at convention, you're telling Nick you're sold out. To his face, and you're not here at a BPM. How crazy is that? Like, if you're completely sold out, you don't miss one meeting. You don't miss one BPM. You try to be at every single event that you can be, right?
No, you try to be at every event, not can be.
Yeah. My son is due November 27th. That's 2 weeks before Wealth Bowl. I'm still gonna be at Wealth Bowl. I told my mom, I'm like, Mom, you're gonna be at my house, my wife, 'cause I got places to be, right? Like, who had a baby last year? It was S&D Daniel, he's in Mark Chuthar's hierarchy.
No, it's David something.
Oh, David Oliveira.
Oliver, yeah.
His baby was born during Wealth Bowl.
Wow.
He left Wealth Bowl to go spend time with his wife and still came back for the meeting the next morning. No excuses.
And by the way, the baby's not gonna know you weren't there.
Yeah. They won't know for a few years, but they won't.
And hopefully that it doesn't mess with their minds for a second.
But now here's the thing, guys. I want you guys to keep in mind. You guys doing this, okay? Keep this in mind. Following this, that's 52 families a year you help. That's 52 legacies you have changed. 52 families that can make sure that they can retire on time, that they never have to do GoFundMe or do what I just showed you, holding up a sign asking for funeral donations, right? Why somebody will have money in retirement if you're doing rollovers and stuff like that, right? You're gonna be the reason why someone doesn't have to go into a nursing home, especially if you're life and health license. You should be talking about long-term care in your presentation, which I need to have a conversation with Nick and how to adjust that, right? But these are all the things that you guys can do, right, with just a life and health license. And it's not that hard. It's just most people, they think it's hard, and so they make it hard on themselves, right? I'm going to leave you guys with this as we wrap up. Something I keep reading out of different books, different quotes. Okay. Actually, I'm going to put it up just so you guys can see it. Can you imagine?
Matt, where do we find that that premium, what do you call it, sheet for Everest?
Oh, you download it on their website. Everything's on their website. Okay, it's the top, this one right here. Unless you're willing to drench yourself in your own work beyond the capacity of the average man, you're not cut out for the positions at the top. And what that means by what if you ask my interpretation, you're not going to lead a team unless you're out physically working. Okay?
Be the person that's-
You have to be an example. Like if Missy were to pull up my numbers right now, you would see that I've requalified for MD on my personal pen. Personal pen. Not team points, personal. Right? Because that's the example I want to set not only for my team, but for everybody here in the office. Right? Like Mario Bayona, he was talking about, he had a talk with Rocky Shee, and he said, yeah, I only did, he's like, I did 200,000 personal points last year. Rocky Shee said, you might as well just retire, dude. He said, what are you talking about? You should be at least 300,000 personal. It's 25,000 personal points a month. Like, what is that, 5,000 points? No, 6,000 points a week. That's like 2 clients at 250. And if you're running a big base shop, if you're running a big base shop, that shouldn't be a challenge, right? Like I was telling Nick, I'm going to do whatever it takes to get him over 100,000 base shop points and running a 1 million point base shop again. And if that means I'm out from 7 to 10 every single day, I will. By the way, I'm not scared to do appointments that early. Earliest appointment I've ever done is 6:30 in the morning. A lot of you guys are still asleep. I'm already doing appointments by 7:30. Especially
At someone's house, doing an appointment at 6:30.
Hey, some of the pair appointments I've done, earliest one I've done is 6:30.
I've done one at 7 a.m.
Before they go to work.
Because here's the thing, just like what I talked about, you can't be scared to do the work.
That's right.
The only reason why somebody like me, or somebody like Nick, or somebody like an Ash, or Thomas, or Jenny is beating some of you guys is because we're just on more appointments. That's what it comes down to. We're making more phone calls when we're on more appointments. That's it. There's no secret to the business. Everything, what's the secret sauce? There's none. It's work. work. That's why I come in early too. Because I used to do all my administrative work between like 1 and 3 in the afternoon. That's why I come in an hour earlier, between 7:30 and 8. I do all my admin work, expecting making phone calls and being out in the field. Because that's how it's gonna get done. And that's how this team is gonna grow to a point where we're busting out the seams. It's just everybody's on the same page, same sheet of music, which by the way, we're working on some stuff where we're gonna give you guys more tools to help you out more in the field, which I've been talking to Nick about, but we're gonna get this done. We're gonna get to like 150, 200 people in this office, every single Tuesday, every single Saturday, to a point where we're running multiple BPMs a week. That's one of the ultimate goals, right? But the only way it starts, it's with us, right? So other than that, guys, thank you for your time, appreciate you guys.